Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. And today I'm joined with my good friend Doug Hagren. Hey, Doug.
Good morning, Kirk. And I have my tea this morning, but I can't believe you don't drink coffee. Well, lucky you. This is why you can afford to still live because coffee prices. What has happened to them. I know they've come back, but maybe that's part of your financial plan. This,
Yes, not drinking Starbucks coffee is part of my financial plan because it's so darn expensive. But that being said, I will tell you, I don't have coffee, but I just did start a morning routine. And this morning I did not have that because I slept in and didn't realize we were doing this taping at 9 a.m. because it wasn't in my calendar. So I'm a little rough this morning, but I will say that my morning routine is this. I did this during COVID. And during COVID, I'll kind of recant this for all those of you who actually want to who recant what happened in COVID. So in
okay.
COVID, like we kicked things into high gear because we were just getting like bombarded with people calling us, we need help, like the world's ending and all this. So we were just on adrenaline for like months. And then once that kind of slowed down, I started to feel what there's a good book called The Survivors Club, and The Survivors Club really talks about how people deal with stress and bad events, usually catastrophic events like a capsized boat or plane crash, things like that. Anyway, it started kind of going through the psychology of it, and one of the things that it hit is after a while you get kind of I don't want to say depressed, but you have like this kind of like blue feeling or this down feeling, and it's kind of like coming off the adrenaline rush. And so I started to feel that during COVID, and I'm like, I'm feeling pretty good, but I just have this weird thing going on. What's happening? So a friend of mine told me about something he was doing, which was Wim Hof breathing and ice baths. So I started doing that during COVID, and oh my God, was it awesome! So I started doing Wim Hof breathing. A little weird for those of you who are not into health or anything like that. But I have to say, like, I felt like I was on adrenaline all day long. Like, legitimately, when I did it in the morning, so I did cold showers and the breathing, all day I was on adrenaline. And it wasn't like an up and a down, it was like a smooth adrenaline rush. It was the weirdest thing. Anyway, so I did that. At some point, I stopped, and it was just like a cool feeling. And for whatever reason, I stopped. But I did start in the last week. So I started doing cold showers in the morning, and there's a method to this because it's really hard. And so I started doing that and started doing the breathing, and I feel great. And this weekend, I got a ice tub. I don't know if you've ever done this, Doug, but I got an ice bath, an ice tub, have it outside, fill it full of ice, and my whole family did it, which was awesome. So we got some videos of that. I might share some on the website. I'm not going to share my family, but just me. And it was awesome. I have to say, it was a lot of fun, and now I'm kind of addicted to it. It feels so good that I used to splash cold water in my face in the morning. Now I don't even feel that because I put my face in the ice tub, and like now my face is like immune to cold. It is so cool. And highly recommend everyone doing it. If you have questions, shoot me an email. I'm happy to tell you about some methodologies. I do not give health advice, once again, even though I talk about it a lot in the show. But highly recommend it. It is better than coffee. My wife hates when I say that, but it is so good. It's like a immediate rush of adrenaline, wakes you up, and you feel good all day. So I don't know. Have you ever tried that, Doug?
I have not tried it. I'm definitely not a fan of cold shower, but I know I've read about all of the different health benefits of it. And you see athletes do it all the time. Like, right. Even you see like baseball players, especially the pitchers after the long game of pitching, they're in that big bucket of ice. And I don't know how they do it without getting, severe hypothermia. But I think that, it takes a heck of a lot of discipline to want to do it. But I think
Yeah.
the benefits of it, there seems to be a lot of evidence.
Well, I think, so just some quick health benefits that have been espoused to me. And once again, I don't give health advice. I need to add that to disclaimer in the show because it's not in there. But no, I mean, one of the health piece of health advice that is talked about is reduces inflammation. So athletes do it. I was actually at a friend's house, and it was a bring your own pool party. And so I brought my ice tub. It was perfect timing that it showed up, and a few people got in, which is great. But I was talking to my friend about it, and he's like, he's like, yeah, he's like, I used to do these. It was the best thing ever. And it reduces inflammation after workouts. A lot of athletes do it as a way to speed up recovery. It has some other health benefits, especially if you have internal inflammation in your body, other, health issues causing that. That is what's helped me, and so it's been phenomenal. So, like I said, highly recommend it. But we're going to move on to something else because some people are probably turning out because they're like, I didn't get on to the health show. This is for financial advice.
You might get a bunch of new people today for that. So.
Yeah, it's like the Joe Rogan show. Joe has about, you got comedy, you got MMA, you got any ways to get this canceled from the mainstream corporate press, whatever. It's all good. All right, let's dive right in this week. We got a bunch of stuff. We're going to keep it short because Doug, appreciate Doug kind of coming on today. I know he wasn't feeling good this weekend. So we got him back, but we're gonna keep it quick here so I can get in my ice bath. All right, so what should we talk about this? Oh, Doug, you sent me too many. All right, I'm going to start with.
Well, let me start with one thing that did pop up last week. Somebody wrote into the show. I'm trying to find it here.
Charles.
Yes, thank you. I was now I post all this stuff. I can't find where it was, but Charles wrote in last week. Yeah, thank you. Charles wrote in last week. He said, thanks for the pod, love the podcast, the view on nuclear as a growing power source. I was talking about how they were actually starting back up 3 Mile Island, and I may have identified the parent company behind that as Constellation Brands, which is not the same. Constellation Brands is a very well-known company. The company behind 3 Mile Island is Constellation Energy. So, Dan, thank you. Great catch for that, Charles. I appreciate it. If I, sometimes you're going live. I know I was looking right at it on the screen, but sometimes it's just the wrong things come out of your mouth. So thank you for clarifying. Because, if you are someone that is looking to invest in nuclear, and we're not encouraging you to go do that, we don't want you to accidentally go out and, invest in the wrong industry, thinking that you're doubling down on the future of energy. So yeah, Constellation Energy is the company behind 3 Mile Island.
I think the reason that Doug said Constellation Brands because he was drinking a little too much of Constellation Brands items. They're well-known, iconic beer, wine, and spirit brands. So I think that's what happened with Doug.
Hey, when 3 Mile Island melted down, I don't know if Constellation Brands was around at the time, but some of the brands that they own were, and I'm sure that there were a few, quite a considerable amount being chugged at that moment by some people behind the scenes trying to figure out how to solve that problem. So, So there's probably some correlation we can find there.
Yeah. So if you're in your house drinking Constellation Brands, then
near 3 Mile Island,
thinking that if you close the windows and your doors, you would be safe, then you're good.
There's no correlation between whiskey and protecting you from the effects of harmful radiation.
But no one's tried it, so you should be the first to try it and let us know how it works out.
And we continue our health advice today.
Yes. Once again, we are not a health show. Do not take our advice because we are not doctors. All right. So one other thing that I pointed out, I think Doug sent this. No, actually, I found it on something. It was Kobishi letter on X, and it was a really funny tweet or whatever they call it now. And I want to read it because the markets are so confounding to so many people that I thought that's why I pulled this tweet out, because it was really perfect for the situation. It said basically, current situation: tech stocks are falling like we're in a bear market. Small cap stocks are rising like a bull market just begun. Gold prices are rising like we just entered a recession. Bond prices are falling like the economy is strong. Oil prices are falling like rate cuts are canceled. The S&P is rising like rate cuts have already begun. Nothing adds up here. I think this is such a perfect tweet because it really describes the sentiment of the markets overall. We're in a confusing market, and we talked about this in the past, and we'll talk about it again and again and again, that we're in a market that is really confusing. This is what happened in the 70s when you have high rates or high inflation, which have been dropping, I must add. But when you're in this type of new paradigm, people get confused. It's really easy to get confused because nothing adds up. And this is a perfect example. So small caps actually make sense, right? If the market thinks that rates are going to drop, and I think everyone at this point, it's a consensus that everyone thinks that rates are going to start dropping. The Fed is going to start dropping rates. That has shown up in the yield curve. So the 1 year actually has gone below 5%. I forget what it is now, like 4.8, 4.7, or something like that. I didn't look at it this morning, but the 1 year has actually dropped below 5, which is a sign that the market thinks that we're actually going to start to drop rates. So if you want to follow something, follow the bond market. The bond market is smarter than the rest of us. And so that is a sign that rates are probably dropping, which means that small caps should start to do better. Now, small caps have gotten beaten up all the heck because of high rates, of high inflation, and big cap stocks tend to do better during that environment because they're more insulated. But they also do well when rates drop. So it's kind of weird that they're dropping right now. Gold prices are rising because of inflation. Bond prices are falling because it says because the economy is strong, but at the same point, they're also dropping because that typically happens leading up to a recession. Typically, when you start to hit a recession, the Fed drops rates. So, it's hit or miss. But the point is everything is really topsy turvy. So if you're a macro investor and you're trying to follow the game plan you followed for the last 50 years, you're probably missing it, and you're probably very confused. Now, I'm going to share this S&P 500 chart from last week because it's apt compared to what we're talking about here, and I'm going to share this really quick. All right. So here is, thanks to FinViz, which I'm giving them props here without compensation, but I do like using their charts. So if we look at the S&P 500, this is really the last week right here. If you pull this out, this is the last few years. But if you look at here, this is really the last week or so. So the S&P 500 has dropped. Wow, look at that. But in the context of a broader bull market, it's really kind of in line with where things should be. Now, if you're a chartist, you probably noticed this, that we have broken the trend line. And last week kissed the top of that trend line, which means in trend following terms that the market should start to kiss this and then should start to drop again. If that's the case, then you should lighten up and get out of the markets and wait on the sidelines. Now, it doesn't mean we're no longer in a bull market. We still are by many contexts. And I'm not sure if I can show this on here.
Since October of last year, I mean, look at the run, and it's one of the greatest runs in history.
Yeah, it has been a great run. And I don't have the trend lines here, but there are moving averages that we could impute here. I'm not sure how to do it. But anyway, if you could put the trend lines, then actually we're still above the trend lines by quite a bit. I think the trend lines are somewhere around 52 something. I'll have to pull it up as we keep talking. But anyway, so if you notice, that's the S&P. That's the NASDAQ. NASDAQ obviously sold off, doesn't look very good. Here's the Dow, which is still doing great. And you should note that there are industries that are still hitting all-time highs. Here is the Russell 2000, which actually is looking pretty good here. Look at this. Why does this keep popping up? It's annoying me. So yeah, you got the Russell 2000 popping up. That's great. So that's small caps for those of you who don't know. So that's looking good. You got the Nikkei, which is sold off. Euro Stock Index, which is doing what it always does, a whole lot of nothing. Then you got the DAX, which also is doing a whole lot of nothing. And you have the VIX, which spiked up but is now going back down. So, if you look at what's going on in the world, it's actually quite interesting. Now, I'd be very curious here what happens, if the markets keep going higher or if they start to drop. So I would watch the markets very closely right now. We are entering the soft part of the cycle, and this is going to dip into my new. Let's see if I can find it here. This is going to dip into my new chart. Where is the chart here? Sorry, you don't want to hear me blubbering about. But Doug just sent me so many charts that I'm a little lost. Anyway, I'm going to talk about it and then I'll find it. But basically, if you look at where the heck is it? Well, maybe you should take over, Doug, and I'll try to find this later. I can't seem to find it, and I got dead air, and I don't want to do that.
Well, Yeah, look at well, you were talking about tech stocks and the Nasdaq being beat up. I was trying to find it here myself. I had it and I thought I grabbed it, but when you take a look at who's been the biggest leaders over the last several years, with a lot of the old
Oh,
fangs
here
and
it is. I got it.
Magnificent Seven. Okay, let me just finish this.
Yep.
What's been very interesting is over the last month or so, some of the biggest drags on the market. Again, a lot of this, with regard to the Nasdaq and the tech, Amazon, Facebook, Tesla, Nvidia. A lot of those names that have been the sweetest names in terms of continued exponential growth over the last decade are the ones that over the last month have really led that decline.
Did you miss your opportunity to get PPP money during COVID? Are you waiting for our president to forgive your student loans? Are you excited about helicopter money? Me too. If you want free money, look no further. I'm giving away free money this week on our show. All I ask is 5 or 10 minutes of your time. I'm so excited to give you free money, I can hardly contain myself. Take advantage of me and my excitement to get your free money. Go to www.moneytreepodcast.com/free money. Follow the instructions today and get your free money. So here's generally, and this is something you should take with a grain of salt, because this is a version of reading the tea leaves. And I say this tongue in cheek, because a lot of people use this. They use trend following. They use data, similar data, and we talk about this in the show on sometimes in chart crimes. But this, I wouldn't call it chart crime. People legitimately look at this and they say, well, in the past 100 years, if something happens, then this happens. It's akin to sports people who are like, well, this person has a batting average of 700 when they're up with, when they're 2 strikes on, 6th inning, when it's sunny out, and they're in Houston. Like, people come up with those stats, and they're like, well, this person, is going to do X. I think it's ridiculous. I think it's hokey, but people believe it. And frankly, if enough people believe it, then it actually happens, because people make it happen. So here's an example. If you look at the typical, there's presidential, and the chart I'm showing shows the stock market average over the presidential election since 1950. There's presidential election years, excluding 2008, presidential years, including 2008. So if you look at the excluding 2008, and this in itself is a chart crime, by the way, because if you're excluding data, then you're really just trying to cherry pick data. So while I understand what they're trying to do, it's still a chart crime, because you need to understand that you don't cherry pick out data just because you don't like it. But if you are trying to show something, then it's interesting. So the dark blue line is excluding 2008, which shows that it's pretty flat in the summer. If you include 2008, which was it was pretty much an S show, and it was a big decline. Now, I will say that in general, whether it's flat or down, we're entering a statistically weak period of time. So whether it's during election year, and the election year is the 4th year of the presidential cycle, just for context, the period of mid-July till about October something, depending on which chart you look at, is a typical weak period. So I would, if you're looking statistically, I would soften up your portfolios during this period in time. I think you're probably going to see a little bit more bounce starting in October to December. A lot is going to happen, because we don't even know who's going to be the Democratic candidate for the election cycle yet. I know Kamala has taken the bid, but a lot of people are mad because she wasn't duly elected. So people in her own party are mad because she was just given this anointed title, and like her or hate her, I know a lot of people in the Democratic Party are mad. So anyway, so we'll see if she sticks, or if somebody else comes in and takes the mantle from her. So that being said, there's a lot up in the air. We don't know. So I the odds makers can't predict this yet, until they get a party candidate that's going to stand up, and they're going to get backed fully by everyone. So if you look at the election years, this is really showing that we're in a soft period, and that's right now. So if you are thinking about jumping all in the markets because the market's doing great, you might want to pause. If you're thinking of jumping out, now is statistically the time to do that. So I'm very closely watching the S&P 500 right now, because if this doesn't break back above that support line that it broke down through last week, then it's off to the races on the downside, and I'm going to go take my candy and go home, or take my ball and go home, depending on who you talk to. But I'm going to take my stuff and go home. So I think that's probably a smart move. If you're on the fence, maybe you ought to consider what's going on in the markets, and try not to lose your shirt. So as of now, we are, we're looking at that fence. So Doug, I know we had a lot to talk about today. We're going to talk about real estate because we're going to talk about that in a while. Where do you want to go from here, Doug?
Well, honestly, we're bunched up against time right now, and I think if I
Oh
was
yeah,
gonna
okay.
if I was gonna summarize everything, I think that's great to just kind of. I mean, let's face it. No matter what happens, people, housing's different than the markets for a big reason. It's because people don't see that price every day. Unless you're looking at charts like this, the markets are always moving. I know markets are absolutely in the back of everybody's mind, so I'm glad you addressing kind of how to maybe take a look at the next couple of months. I'm going to wrap up here just by saying that look, we can we'll talk about the real estate a little bit more because I think in our next conversation. But what you're talking about with the markets falls into the fundamental 6 areas of risk that people need to think about. Okay, and the reality for most people is they have no idea how much each of these risks affects them because they haven't done the level of analysis and proper fundamental planning that needs to be done to make sure that to what capacity those risks are going to have an impact. Stress testing everything you're doing. What are we talking about? We're talking about taxes. Okay. Next year, actually, that's something we'll talk a little bit more about is the Trump jobs, the Trump tax cuts are expiring for 2017 are expiring next year. So possibly some effects there. They're talking about possibly in certain brackets up to a 4% increase in taxation. So taxes, how is that going to affect your ability to be able to have enough money? Inflation, obviously costs. We all know costs are going up. Longevity, which compounds everything more the longer you live and running out of money and having enough. Then there's mortality. Obviously, that's the unexpected loss of life that leads to the financial loss to the rest of the ones you love. And Kirk just talked about market volatility. Markets go up, markets go down. We always talk about volatility versus permanent loss of capital. Permanent loss of capital happens when that market volatility happens at the worst possible time when you need the money. A lot of people have their money in the markets, and at the time that money's in the markets is right when they need it, right? Because you're always trying to squeeze or eke out that extra little gain. And this leads to the last one, which is kind of tied to the markets a little bit, which is liquidity. And liquidity is having access to capital for the things that you know and plan for, as well as access to capital for the things that are unexpected, like health. And one of those things that you may not have planned for is college. And that comes back to also market volatility too, because a lot of people are like, now I got the money in the 529 or wherever you're saving it. And, I just need a little bit more because we don't have enough to pay for college. And then all of a sudden you keep it there. And right when you're ready to pay that tuition bill, the markets drop. Okay. This is all about planning. And most people, unfortunately, have not properly planned for college. You know the story. You probably know plenty of people, if not yourself, that are struggling with how am I going to have enough? How do I pay for it? College has gotten expensive. You know the worries. All those things together. This is why it's part of a major retirement plan to put all this stuff together and make sure that it's working to you. And how do you overcome those different stresses? So listen, if you want to learn more, where to find me, check out mergentcollegeadvisors.com, MERGENT, collegeadvisors.com, to get more information about one of the biggest liquidity events of your lifetime and how to make sure that your retirement and your financial house stays in order and stays that way forever.
Yeah, thanks for coming on, Doug. And I know we're going to wrap it up now in the interest of time because I was a little unprepared this morning. Doug's got stuff he's got to do, so we're gonna wrap it up here. But I will kind of take this out with with the aspect that with a lot of stuff that going on, and we'll talk about housing next week, because I was hoping to get to it this week, but we couldn't. But there are changes afoot, and we're gonna definitely kind of share with you. But I will tell you that if you do have current drawdowns from last week, the current drawdowns as of Thursday were pretty deep for a Magnificent Seven. So you got the NASDAQ was down 7.5, close to that. Apple is down 7, Microsoft's down 8, Amazon's down 9 and change, Google's down 9.5. I don't have the rest, but I believe that Tesla was down a lot and a few others. Anyway,
Tesla was down 44%. I don't know. I forget the range.
Not
Yeah,
from
no,
that.
not in the past week, but in the
Yeah.
range that I was looking at. So there's been some big shift over the last couple of weeks.
Yeah, I mean, if you look at Nvidia's down 14.5%, Facebook's down 13 and change. So there's definitely been a sell off, especially in big tech. However, there's other areas like the aerospace and defense industry, which is up at all time highs. So just as a kind of recap from earlier, it's just something to keep in mind that the market is not wholesale selling off. Everything's not. It's because big tech has such a big portion of the S&P, why the S&P was drawn down. Because if you look at things like the Dow actually has not sold off all that much. And the Dow is mainly 30 stocks that are large cap stocks, but not necessarily big tech. There are some in there, but it also has some other more stable companies as well that are not tech related. So we have, once again, this kind of crazy kind of market. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.